Everybody, my name is Jason Gold, and this is another episode of Investor Reacts. This is where I break down the transcript of a conference call of a publicly traded company, and I give some insight into how the street really viewed the results. I tend to focus on companies whose stocks not only underperformed the day after they reported, but continued to underperform for some period of time after, because that tends to show the street's lack of confidence in management and exactly what happened on the call. Today's episode, we're going to be talking about a company called Teradata, and the quarter we're talking about is Q2 of 2022. So let's get started. So the day after Teradata reported their Q2, the stock fell 8% in a tape that was up just under 1%. The stock continued to underperform for a span of several weeks, even months, even as the market bottomed and then began to come back for a while. I think this is because the street looked at the results and felt like the year ended up being far more back-end loaded than they anticipated, and they also thought that management's tone didn't properly reflect the numbers that they put out during the quarterly report. Let's dig into it in a little bit more detail. So the way the call started out, management reiterated their guidance for the year and talked about how excited they were, not only about the back half pipeline, but the momentum that they had in the business. But let's set this up. At a headline level, the company had missed their ARR, their revenue, and their billings for the quarter. So already investors are wondering, wait a minute, the company has missed their numbers, the year is more back half loaded, and the company's telling me how bullish they are. Something doesn't seem right here. And I think that's the major key that got the call off on the note where investors were a little less apt to listen to all the bullish things management had to say. The second thing that happened is that the CEO talked about what was going on in the business, but failed to remind people why they're there. What is it that Teradata is doing? What problem are they solving for people? Why are they doing it better than other people? And importantly, the company had an analyst day a few months before where they were talking about their new cloud strategy. I think it's always really important, particularly when you have a new strategy in place, to consistently remind people why they're there, why you're doing what you're doing, and why it's important. People forget sometimes. They're covering so many different companies. It's very easy to forget why you own something, why you're there, what the key reasons for being involved in the stock are. And Teradata's management, rather than just getting into the results of the quarter and talking about things bullishly, should have reminded people about the basic story of Teradata and where they're taking this. If I'd been advising the company, what I would have suggested is that they start off with a little bit more humility, something that recognizes that the numbers didn't quite meet the guidance that they'd set, maybe something along the lines of, although we failed to meet our ambitious guidance that we set at the beginning of the quarter, we are still excited about what the roadmap looks like for the back half of the year. Something along those lines. I think that humility is critically important, and being transparent with investors is also really important to gaining their trust. Management credibility is so important to a stock's multiple that it's really critical that you do everything you can to be as transparent and honest and really empathize with what investors are looking at. In a quarter where you miss the key items and take down guidance, it's important to recognize that, and then you can develop your story. You can even say to people, the results didn't meet our guidance, but here are the reasons why, and here's why we have confidence in the back half numbers. Teradata management didn't do that, and I think that created a rift between management and investors. You know, the other thing about this is that investors don't expect management teams to always be bullish all of the time. Life is never perfect for anyone, and companies are really no different. They have bumps in the road. The path from A to Z is never really smooth. And so pretending that things are great all of the time just makes investors wonder, what is really happening that I'm not noticing? What is really going on that isn't good, that management isn't talking about? I think it's generally better to just be transparent and honest and talk about the bumps that you have in the road and how you're fixing it. Recognizing that you have a problem or had an issue makes investors feel better because they're going to see it anyway in the numbers. Remember, the company missed the headline numbers and widened their guidance for the year. People knew something wasn't just right. And so to ignore that almost made investors feel like management is out of touch with what's going on. If management looked at things critically, they would have known that the stock was going to be down the next day, but they just didn't acknowledge it. Their tone was very, very bullish, and you could see it in some of the Q&A that showed up. One of the very first questions was trying to square management's tone with the numbers, and management just didn't get it on the same page. And I think that's reflected in how the multiple collapsed in the weeks and months that followed this report. Another thing that management did is they spent a lot of time talking about currency. Now look, I get it. Currencies were wild for everyone in Q2 of last year and continued really in Q3 of last year. So I get it that it's a headwind to people. But when it's a headwind to every company out there, you don't have to spend as much time talking about it. Management mentioned currency headwinds 17 times during the first portion of their prepared remarks. And they didn't talk about the story of why people are involved in Teradata and where the company is going. I think that mismatch, again, shows a little bit of being out of sync with what investors want to know. Sure, currency is important because it helps explain some of the numbers that they've reported. It helps explain the guidance going forward as well, and people definitely need help with their models, don't get me wrong. But 17 times consumes a lot of airspace on a limited amount of call time. Realize that investors have only a certain amount of interest and time that they're willing to give to a company. And every minute of that time needs to be spent on important stuff that they can use to help flesh out the story. It would have been okay to spend 1 second on currency and say, I'm going to point you to slides that we have in the presentation that walk you through all the calculations of how currency affected each line of our business and how it affects our guidance going forward. That would have been sufficient, and that would have freed up more time for management to spend more time talking about the business itself and where they're taking it. I referenced this before. Another thing that management didn't do is talk about the bigger picture. Where are they taking Teradata? What is the strategy for transforming this historically on-premise business into the cloud? This is a classic transition, and transitions, as I've said before in other videos, require a lot of hand-holding. Tell people why you're doing it. Tell people where you're going. Show people what the prize at the end of the rainbow looks like. What does an investor get for suffering through this trough period where revenues feel pressured and margins feel pressured? What does it look like out the other side? Is there a cash flow target? Is there a margin target? Is there a revenue target? Is there something? The prize that someone can look forward to for dealing with these very uncomfortable financials for a period of time. That's what you always need to be keeping people interested in. We call it the shiny toy just out of reach. People need to understand why they're going to be with you and what they get for going through this. And Teradata didn't spend time doing that. It goes back to the point that I just made about currency. If you use too much airtime talking about a modeling item, you give up the opportunity to talk about where you want this company to go and where you think people should focus their efforts. I always love it when companies give customer examples. They're really helpful to an investor to understand, why did someone choose you? What made you different? Who did you compete against? These are the kinds of things that we like to do when we go out in the field. And Teradata did a good job of giving customer examples. So I applaud them for using that in their script. However, the customer examples that they gave were a little bit generic. They just were almost name dropping. Name dropping? That's not really fun for investors, because even the worst companies can name drop big customers. We don't know how big they are for the company. We don't know how much revenue they generate. We don't know if it was just a trial. There was a company that I used to follow, as actually a competitor of mine when I was in the investor relations seat, that used to talk about winning these gigantic customers, but they were small trials in one little facility. It was almost disingenuous. I don't think Teradata was being disingenuous with their customer examples, but they weren't meaty. They weren't something where I could read that customer example or listen to that customer example and have confidence as to why they chose Teradata, who they evaluated them against, what problem they're solving, and that this customer is going to be big and meaty. I think that Teradata could do a better job of polling their sales force to understand which customer wins really demonstrate the success of the company and give those to investors. As a side note, one thing to know as a management team, investors will often call the companies that you give as examples to do their own research. And we as investors will ask the companies those questions. Who did you evaluate this company against? What are you paying for? What problem is it solving? Do you like it? So make sure when you're going through the list of companies that you will use as customer examples, choose wisely for ones that you know would stand up under our line of questioning. Another thing that management did that I think created a rift between investors and the company, and how it showed up is in the multiple, is that they actually lowered their numbers, but told people at the headline level, we are reaffirming our guidance. What? So you are actually lowering numbers but reaffirming guidance. Which one is it? Now, I suppose their argument would be they were just widening the range on ARR, and the only number people really care about is the cloud ARR number. Maybe, but the reality is, if you're widening the range for one important metric, you can't say we're reaffirming our guidance. In addition, ARR is the forward-looking metric for Teradata. They reaffirmed their revenue guidance and their profit guidance for the year. In a company like Teradata that is transitioning to being a subscription business, revenue and profits are actually backward-looking. So I think the street sort of scratched their head and felt like management wasn't really understanding how investors look at this company, which is that ARR is the forward-looking metric. Now, I give management some credit. The cloud ARR business that they have, which at the time of the call was about 25% of the business, was growing very rapidly, and they felt really good about that. They even said that they had a very good pipeline for the second half. I applaud that. But it's not all or nothing here. What I think they could have done, and had they been my client, I would have advised them to talk bullishly about the cloud ARR number. However, within the broader context of all the things that were happening, currency, macro, whatever it is, we are widening the range for total ARR. Realize that total ARR is 4 times the size of their cloud ARR business. So it's actually the biggest thing moving the needle. And to ignore that, or to try and stealthily guide down by widening the range and yet saying that you're reaffirming guidance, makes people feel like you don't understand how we do our job. And remember, when investors feel like management doesn't understand them, when they feel like management doesn't deserve a ton of credibility, the street rewards them with a lower multiple. And so the way you need to connect with investors is to empathize with what they're going through. I usually start off by acknowledging the issues that investors are likely to see in the numbers. That calms people down and shows them that the company actually understands how they do their job. That tends to be rewarded with a higher multiple. I'm going to summarize here. Teradata is a good company with a bright outlook in front of them. They're undergoing a transition. There's an opportunity to be slightly more transparent and, importantly, to connect with investors in a way that investors feel like management understands what they're going through. I would suggest that they start telling the story a bit more cleanly. Don't assume that people are Teradata PhDs and already understand everything about them. Number 2, disclose as much as possible. And 3, when the numbers are moving around, because Teradata has a lot of moving pieces, just be transparent and clear. Humility goes a long way with investors. There's no need to be super bullish all of the time. Just tell it like it is. And if things aren't going great, acknowledge what happened, provide an explanation for how it happened, and then tell people how you're fixing it. The other thing is, particularly in this tape, investors don't like it when you reaffirm your guidance for the year but take down the near-term numbers. That creates a big second half ramp, and investors are generally scared of that. In today's market, here in 2023, when it's a risk-off environment, people like to see numbers that have been, quote, de-risked. That means there is no giant hockey stick. So for Teradata or anybody else, to the extent you can lower out quarter numbers and not rely on some big move back in the economy, the better you'll be. That's it for today. Thanks for tuning in to this episode of Investor Reacts, and I look forward to seeing you here again next time.